I'm sure you've read some books and articles on trading, watched videos from other bloggers, and perhaps even taken free courses. But if you're watching this episode, it means you are not yet trading profitably. Even if you regularly make profits, it doesn't matter if your losses are even slightly higher than your profits. To make your profits outweigh your losses, you need to fix just 3 mistakes that I will explain now. In my first year of getting to know the financial markets, I had made many mistakes that hindered successful trading. First, I thought that sitting in front of the charts around the clock would quickly make me a good trader. I spent whole days searching for technical analysis patterns, drawing levels, identifying candlestick patterns, but after a series of profitable trades, I would hit a streak of failures. The second mistake was blindly copying trades. By blindly, I mean I entered every signal I saw according to the strategy without considering the context, such as news, economic data releases, signals from other indicators, and the appearance of important patterns on the chart. The third serious mistake was choosing the wrong time to trade. I traded at any time, morning, evening, night. I didn't take into account that the market behaves very differently during different sessions and hours. The same asset can be very calm at one time and highly volatile at another. Here's an example of a trade where, according to the strategy, everything seemed correct, but there was a serious mistake. I opened a buy option from the moving average. According to the strategy, the price touched the moving average from above and started to bounce back. This signals that the chart will soon rise. It all seemed logical and simple. How could there be any mistake? There was a clear signal, just enter and make a profit. But the problem was that there was no clear trend. The indicator was almost always horizontal, constantly changing direction, with a very small angle of inclination. The result of this trade was very unpleasant. I lost almost $300 from my deposit. This happened because I didn't consider the chart's context. I was training a strategy designed for trends in a sideways market. Now let's go through each mistake to make your trading enjoyable and profitable. But first, please like this video and subscribe to the channel. The first thing to correct right away is overtrading. It looks like this. Someone sees that trading can be quite profitable. They study strategies, analytical methods, and start trading. The first trades bring profit, which leads to excitement and the desire to develop further and earn more. There is nothing wrong with that, but beginners often take the wrong path. Instead of allocating time adequately between studying and practice, they start spending unlimited hours at the computer. Initially, this might bring good results, but after a week or even a few days of working like this, problems begin. The trader's attention scatters, they start getting confused by signals, sometimes press the wrong buttons, incorrectly set up indicators, and make entry decisions too early or too late. This happened to me too. For example, once after many hours of trading over 3 days, I entered a trade of $1,000 instead of $10. I almost placed my entire deposit, and the trade turned out to be a loss. At the time, I was just starting to trade, and it took me a long time to recover from such a shock. There is only one solution here: create a work schedule for yourself. Yes, you heard it right. You need a strict schedule for trading. It's better to choose the same time every day, as the market behaves differently at different hours, and it's better to get used to the same periods. For example, trade from 6 p.m. to 8 p.m. on weekdays. Don't touch the trading terminal at other times. This way your trades will be precise and you'll make market entries with a fresh mind. Here's an example of trade where I used the same strategy as before. This time I opened a sell option from the moving average. The trend sharply changed due to the news about the US dollar, meaning you could make sell trades for a while. The price rebounded downwards from the indicator several times, confirming the new strength. I decided it was time to profit from this movement and I made good profit. This was my second trade of the day. My trade limit is no more than 10 trades per day, and this was the second one. Such a limit, along with the work schedule, helps prevent overtrading and always view the market with a fresh perspective. This is just one life hack that helps reduce the risk of incorrect trades. You can find other life hacks in my Telegram channel, link in the description. There I also give signals, analyze trading situations, and provide personal consultations. Make sure to join. And while you're subscribing, let's move on to the second mistake. Many traders take every signal given by indicator or pattern. You might think, what's wrong with that? We are trading according to the strategy. Technical analysis is a game of probabilities. Each pattern and indicator in a strategy provides its signals. Some signals might be stronger, others weaker. If your strategy relies on just one type of signal, it's a weak strategy and should be strengthened. For example, you might trade based on overbought and oversold zones. Selling when the RSI indicates overbought and buying when it shows oversold. This works well in sideways market, but if a trend starts, this strategy will bring much disappointment. You will need to trade only in the direction of the trend to significantly increase the likelihood of probability. You can strengthen RSI signals in other ways, like using candlestick analysis alongside it. If you see a lot of wicks like doji and pin bars during an overbought condition on the chart, that's a strong sell signal. Combining indicators, patterns, and figures significantly increases the probability of profitable trades. One of my favorite strategies is trading on Heikin Ashi chart reversals. Previously, I only used doji for signals. When I added the moving average, my trade win rate increased significantly. Let's look at an example of an entry using Heikin Ashi. Here I have an open buy trade. After the price fell, I saw a clear doji candle. Previously, this would have been enough for a signal, but now I also have a 10-period moving average on the chart. The second signal is when the candle breaks above the indicator from below and closes above it, as happened here. This allowed me to enter a buy trade with high confidence that I would turn out profitable. I want to go into why Heikin Ashi or how to set it up. Check my Telegram channel for that. I often post trade examples that are not just with this strategy, but others where I combine different signals. Meanwhile, this trade turned out profitable, so let's move on to the next mistake. Let's talk about timing, how to choose the right time and why you shouldn't trade whenever you feel like it. Incorrect timing is one of the main rookie mistakes in trading. This alone can easily wipe out your entire deposit. But why does this happen? After all, the assets are the same, the market behaves differently at different times. This depends on trading sessions. For example, the European sessions is considered the most suitable for trading. The market is very active, with many participants trading simultaneously. The price moves smoothly with nice pullbacks. During the Asian sessions, charts seem to freeze. There are hardly any traders for Western assets, and the price moves within a narrow range. You can use trading clocks like those on stock time to keep track of sessions. Besides trading sessions, timing should also be chosen based on the density of economic events. Sometimes large blocks of economic data are released simultaneously. It's best to stay away from the charts an hour before and after these releases. The market usually gets so volatile due to the news that trading becomes impossible. You can determine the density of events using an economic calendar. The best one, in my opinion, is on investing. In the beginning of my trading journey, I had significant problems with this. I traded without paying attention to timing, often getting caught in market turbulence during economic data releases. Now I allocate specific times for trading on different days of the week, check the calendar to avoid news blocks, and therefore always manage to trade in a moderately active market. In conclusion, I'll show you a trade made at the right time, with a fresh mind and strictly according to the strategy. This entry was during my designing trading time, and I opened a sell trade. The chart shows a very nice stable downtrend. The price touched the moving average from below, which is a good signal to sell. As usual, I open a 1-minute contract because most of my strategies are related to scalping. Before this trade, I check the economic calendar to make sure there aren't many important news events that could cause the price of suddenly change direction. I don't like trading these surprises, and there it's a quick profit. On this pleasant note, it's time to end the trading session. If you enjoyed this video, please like it and subscribe to the channel. There is definitely more to see here. Make sure what you have heard here sticks with you. Apply these 3 simple rules. They are fundamental for a beginner trader. You can copy a strategy from the video, but try to trade in a way that avoids the mistakes we discussed. If you find the strength to do so, you will surely succeed. Wishing you the coolest trades and strong financial growth. Goodbye!